What's up, guys? Before I begin, it's not financial advice. Please do your own due diligence before making any type of investment. Past performance is not an indicator of future performance. And research, research, research. I always say this in a lot of my videos, but today I really wanted to look at the S&P 500 because we're at a very critical point right now where, either you could be catching a bottom or you could be catching a bottom in the stock market, like one of these lows or 2018 low right here. So ideally, this could be a really great time to get into stocks, or the latter could happen, which is what I really think is going to happen. We're going to lose this channel we've been moving up in for 2009, roughly 11 years. We're about to lose this channel, and I think we're going to start something like a Great Depression where we give up a lot of these gains, massive deflation, and you know what? We've already seen the helicopter money came a lot sooner than I thought. $1,000 handouts, Trump's really trying to get that re-election, right? So he's pulling out the tricks out the bag. I mean, helicopter money was inevitable regardless of whoever the president was. I'm not here to talk politics, but I want to talk today because we're at some critical levels. I wanted to talk about the S&P 500 because over the last 10 years they've kind of really carried the market, especially tech stocks, FANG stocks, Amazon, Apple, Google, uh, Facebook, uh, Netflix, etc. So right now we're at this resistance right here, and what I'm expecting to happen is I think we're gonna have a relief rally here. We heard about the helicopter money. This is a weekly chart, by the way, so every Friday these candles close and the new one starts. But I would expect a couple weeks where we kind of range and we kind of get close to this 200-week moving average. And sometime over the next month, we're gonna get some crazy news about, like, I don't know what it could be. Maybe Donald Trump catches coronavirus. Maybe there's, a massive bankruptcy, or maybe the oil, frackers are in huge trouble and they're on the verge of declaring bankruptcy. They can't operate at losses anymore. So I think we're going to retest this 200-week moving average, get some really crazy news, and boom, we're just going to lose it. We're going to really sell off hard off of this, out of this channel. So, but it's also quite possible. I have to talk about this other situation, because if we're printing money and we're able to, buy back stocks, stabilize the economy through the printing of money and quantitative easing and lower interest rates, then I think what you're going to want to see as a conservative investor, let's just say, like, what would be confirmation to me that maybe this isn't this Great Depression crash that I think is going to happen, is we reclaim this 200 week, we move up, and then we come back and we retest it successfully. And after retesting it, we just kind of start chugging along, and maybe we break this channel. Then stocks do what I originally thought they were intended to do, which is go parabolic. I think this pandemic that's going on, the way the global economies have halted, I think the mania that's going on around the world, although Costco sales must be through the roof right now, and so is Zoom. Um, I think then maybe we can just go into that mania for a few years where stocks just have a ridiculous pump. But given what I'm seeing right here, we've lost the 200-week moving average. We're bouncing off of support. I think we're going to see a retest right here, and then we're going to start falling off very soon. Why do I think that? So just going back, I think just looking back at this last crash in 2008, So right before the Lehman Brother news came out, or yeah, the Lehman Brothers, right before they went bankrupt, we had lost this channel already. We were climbing up, and then we lost this channel. And this is when the news came out that Lehman Brothers were going bankrupt, Bear Stearns, and we just started selling off, pretty crazy. It went from 1200 to 800, so like, roughly a 33% move from already the peak, which was 1500. So we were like 50% below, and then we went pretty darn low. We gave up a lot of the gains, and I think we're setting up for something very similar. Last time we lost the 200 week before in 2001, although the S&P wasn't really the market that was pumping, that was the Nasdaq. Um, what we saw here was in 2001 was we saw we lost this kind of we lost the 200 week, then we rallied up, we kind of got over it, but then we just really started sinking, and it's it's crazy because leading up to 9/11, the market was just selling off like crazy. That's pretty crazy to me. Um, yeah, this market was selling off. I mean, I guess it had been selling off for a while. It was moving in that downward channel. So yeah, maybe it's not as much of a coincidence as I think. But yeah, that's pretty crazy because the week after, yeah, 9/11, yeah, that big candle. But anyways, we lost that 200 week. Finally reclaimed it and moved up for a while up until 2007. But we had the retest. When we finally topped the market, when we finally topped the market, we retested here, and then we reclaimed it, and then we came up, and then we retested this 200 week, and then stocks just kind of started going up. So you don't really get too many breaks of the 200 week. This could be a crazy fake out. But I don't know. I don't know. I don't know if this is the time it's a fake out. Maybe we do bounce over, and if we bounce over, then I'd be quite bullish on stocks again, and I'd say maybe this show goes on for much longer. Um, but I think, right here at support, this was a great place to get a relief rally. We're gonna get it. Let's see what happens with the retest. Um, yeah, and beforehand, 1987, like it's kind of crazy because like, in the 80s, I would just say like in the early 80s, you can't really say much about stock market because we were dealing with higher interest rates and crazy inflation. So that's typically when gold has its run. From 1970 to 1980, we saw gold go from $35 to 600, and it was because of rising interest rates. And interest rates play a huge role in gold's price. When the rates are going down, gold usually doesn't do well. So think about this, in 1980, from the high, we started lowering interest rates, and look how stocks have performed amazing, over this course. Amazing. They've done fantastic. They've done fucking fantastic. Um, and that's really as the rates are falling. And we saw the bottom in stocks around 2000, 2001, 99, and or not the bottom in stocks, the bottom in gold. I'm sorry, in about 99 to 2001. And then gold started rising, and a couple things I do want to point out that were very interesting to me. So I use this 50 and 200 week crossover. It's kind of like confirmation of a bear market, really. But I don't think it really holds as much significance as dipping below this 200 week. I don't use dynamic moving averages too much, except for, the strong indicators for me if I'm like trying to predict a bear market or a bull market. So it's kind of like that strong signal for me. I wouldn't really heavily rely on it, except for something like this. I think this is pretty strong. But anyways, when this 50 week moving average crossed over this 200, this was really $40 off the exact bottom for gold. Okay, and here, so gold didn't top out here, but I'd like to point out that from 2004 to 2007, the interest rates were rising. And as I said, in the 1970s, we saw gold really rise when the interest rates were rising. And here we actually saw like a very, it kind of held along the 50 week, and then gold rose along with it. But I would just like to point out that this next time we had this 50-week moving average cross this 200, it was around this time. Within a few weeks, gold had bottomed. So within a month, gold had bottomed. Um, and then when we crossed over here, this was about 6 months before the highs. And the highs for gold in 2011 was actually when we retested this 200-week moving average. So I think it's kind of interesting how these moving averages um, really gave some signals towards gold highs and gold lows. And I'm a big believer that if we go into a depression, kind of like the 1930s, we have so much debt that the only way they can recalibrate their balance sheets is through a revaluation in gold, kind of like in 1934, 1935. Could be a shocker. They could throw helicopter money. They could throw money into the stock market. Um, at the end of the day, they're trying to prevent deflation. And the only way they're going to prevent deflation is by lowering interest rates and throwing helicopter money. So for those of you who are scared of hyperinflation, inflation, um, I wouldn't really worry about that as much. Well, obviously we can have a reset or a revaluation in gold, which is kind of what I'd expect to happen, especially if we go into a Great Depression. Um, which is why I'm really interested in gold. And I think I think what you have to look at is, gold in deflation, gold sells off. And perhaps in a paradigm shift, it will go up. But what I'm going to be looking at is kind of like I'm going to be looking for this 50-week moving average and this 100-week to really kind of, or this 200-week to cross. And I want to see where gold is around there. And I'm really going to want to load up on silver and gold and, maybe Bitcoin again. As you guys know, I'm pretty bearish on Bitcoin. I've been one of the biggest advocates for Bitcoin. I personally thought if the stock market was, if this didn't happen, I still think Bitcoin would have went to 50,000, 100,000 by 2021. Um, so like I still think that prediction would have been true had it not been for these circumstances. But as soon as we lost the log scale, I was out of Bitcoin, and now we've lost the 200 week. But maybe Bitcoin's going to be something I want to look at around this bottoming for gold as well. I'm treating Bitcoin kind of like gold. So I think when we get this crossover, I like to see where gold is, and I think that's going to be a great time to really start thinking about adding physical and silver and gold to your portfolio. Because at the end of the day, what we're seeing here is a liquidity crisis. They're giving $200 trillion into repo markets so banks can have overnight loans and they can try to pay back everything as soon as possible. And they're really drying up on liquidity. So in a liquidity crisis, usually the dollar is king, cash is king. But I also think that we are undergoing a sort of paradigm shift where we're seeing a monetary system fail, quite like the 1930s when we saw the pound failing. Little context behind that, we're on a gold standard, and the British pound was they were the global currency reserve. And what happened was during World War One, usually a lot of countries used to hold a lot of used to hold a lot of gold. Well, they held a lot of bank too. I guess that makes sense too. But they held a lot of gold in the Bank of London. London had held a lot of gold reserves, but over time, people started taking it out as the war began, and they weren't too sure where it would be safest to keep their gold, so they sent it to New York. Um, New York was one of the safest places. I believe it was New York. Don't quote me on that. You guys could double check. Leave it in the comment. If I'm wrong, leave it in the comments. Let me know what bank it was. I'm pretty sure it was New York. Um, so so we started seeing that paradigm shift, and that took about, after World War I all the way to World War II, so about 25 years until the pound lost its reserve status. And right now I'd say, like, for the dollar, king dollar, we're at about, 10 years in. So I think we still have about anywhere from 5 to 15 years of the dollar being like a global reserve currency left, unless we have a black swan event, something very shocking that just kind of sets the world on fire. Maybe the dollar gets too strong and kills a lot of currencies. I'm not too sure. But anyways, with the paradigm shift, with the global liquidity crisis, I expect there's going to be a lot of speculation into gold and silver. And as that speculation occurs and as this deflation sets in, I think a lot of people are going to want to buy stocks, and we're going to start having, maybe we'll pump this market back up, but I think gold is going to be a very safe hold. I think there's going to be a lot of speculation into it. It should hit all-time highs. I'm expecting gold to go to $3,000, $4,000 over the next few years as the speculation rides out. And then we go into kind of like a 10-year, 15-year correction for gold, if they could stabilize the dollar. But we'll have to see. So I think that's kind of what's setting up in the world, or maybe overnight we do a reevaluation. They might just say, "Hey, gold's now worth $3,000 an ounce." So not too sure how that's going to play out, but yeah, gold. Interestingly enough, there was kind of patterns with the S&P and gold bottoming, and these, moving averages being crossovers, and then when they crossed over and retest of, critical moving averages being tops and bottoms in gold. Like, the bottom in gold was very close to the price was very close when we crossed over here. And over here, it was a special circumstance because the rates were rising, and I think we're not really in that same scenario where the rates are rising. When the rates were rising from 2016 to 2019, we saw gold do quite a spectacular run. Went from like 1100 to 16, 1700, I want to say. Um, but now I think we're going to see a little deflation, and we're going to see the rates lower, and we're going to see everything sell off. But yeah, guys, I think this is what we're seeing in the stock market. I think this is kind of like what's going to happen in the world over the next few years. And yeah, I think it's going to get pretty ugly. So I'd highly recommend that you guys find ways to protect yourselves. Get ready, protect yourselves financially, physically, mentally. Have a good support system. Be around your family. You guys are going to have to unite more than ever. And yeah, I hope it's not as bad and we're able to weather the storm. I do believe in humanity. I believe we'll all get through it, but it is what it is. We're gonna have to deal with this, and I think it's best to prepare for it now rather than, looking like a chicken with his head cut off. So, anyways, guys, that's really it for today. This video is a lot longer than I thought it'd be, but yeah, I think it's just kind of a very critical moment where I expected support here and I'm expecting relief here, but we're gonna have a massive sell-off then. I think some crazy news is gonna come. So we'll see if it happens. Hopefully I'm wrong. Hopefully we recapture this 200-week moving average. We're able to rally, and then, on a retest, that would be kind of confirmation that we avoided a crisis, guys. We avoided a depression. That's what I'm hoping for. But, as much as, just want to say this, as much as I've studied this market and as much as I've been anticipating something like this bad happening, I really don't want it to happen. I'd rather the markets just kind of go up, buy us time. Hopefully people become more educated and informed, and they can make, you know, more timely decisions to kind of protect themselves. But I really think, guys, that time's running out before things start getting really ugly. So, I definitely wanted to put this out here and just give you guys some cues, like, of what you should expect to see in the markets. But all right, guys, that's it for today, and we'll see you next time.